Where does house hacking specifically belong in the FOO? My wife, who's 24, and I, 30, have $150K of income. We're at step 5. Is house hacking considered step 8 since it would be our residence? What do you think? And can you define house hacking just in case that's a new concept for someone?
Brian, since you're the guy that wrote the book on the FOO, I'll tell you what house hacking is. You talk about where it fits in. So a lot of people recognize that in this unique housing environment we're in, where the prices of houses have gotten really, really expensive, interest rates are not all that favorable right now, somewhere between 6 to 7%. The cost of home ownership has gotten really, really difficult, especially for young people trying to get into their first home. So one of the ways you can get around this, or one of the ways you can try to just get on the ownership side, is by what's affectionately known as house hacking, where essentially I buy a property, but I have someone else come into that property to help me pay for it. This could be buying a single family home and having roommates, buying a duplex and renting out one side of the duplex, buying a quadplex and renting out 3 out of the 4, and then you living on property, on premises as your primary residence. What it allows you to do is own a thing, get into the ownership side, but have other people help you pay for it, so that way you get the costs down. It's a wonderful way to get early on real estate exposure in terms of your primary residence. Now, Zach's question is, all right, I get it, understand it, makes sense. When do I do it? Is this a step 8 type thing?
I don't, I look at it as, because by the way, Zach, well done in the fact that, when I think you get into real estate, traditional investing, meaning you buy single family homes, apartments, whatever it is, commercial real estate, that is a step 8, because a lot of people jump into real estate way too early and they don't realize that whole element of leverage that you get so super excited about, how it can really help you on the way up as real estate appreciates, can also be the bane of your existence if you get into a bad real estate marketplace. So it's just higher risk, and typically you need additional pockets or deeper pockets so that you can cover those periods where the real estate marketplace may be stuck in the doldrums or just drags bottom for a few years. So now let's bring it back to house hacking. What I like about house hacking, and this will kind of lead to the answer too, is that your banks will let you use a primary mortgage interest rate, which is cheaper. When you're living on premise, that it's your primary residence, they give you better rates than if you were going out there and getting a residential rental property. You're going to pay a premium on that because you're not living there and it's an investment. This is a way that you essentially get to bring an investment property in with, and you're not breaking any federal laws.
How about a lower down payment also?
You also get a lower down payment because you're putting the money in. So I look at this as, yes, it is a way to get into residential real estate investing, but it's also a better way to get into how can you afford, a primary residence in this crazy new world we're in, where real estate ran above inflation and affordability has gotten into a bad place. But with all that said, now that I've told you how much I love it and praise it, you still have to make sure that you're running the numbers on that leverage to make sure you don't get out over your skis and you get yourself in a pickle of a situation. Because what happens if you go a few months to, let's just say 3 to 6 months, that you just can't find a roommate, or you find out it's a roommate versus it's a duplex, there's things that go wrong. It just doesn't
work real well.
You need to still make sure you're conservative enough that your emergency reserves and your down payment all reflect the risk of the situation. But we absolutely love house hacking. I think it's something that a lot of people should consider if you want to take that step, and you don't mind the hassle factor of essentially being a landlord as well.
And I love it if you're going to do it. Again, my experience, this is not like tried and true. It is a little bit easier to do when you're younger. So you said you guys are 24 and 30. This is the time that if this is something that you were going to try, and I didn't mention if you have kids or what the job situation is. I mean, you still, when you think about buying any home, we have, it's a home buying hub. You can go to moneyguy.com/resources. We have a checklist of things you need to think about when you buy a home. We have a home affordability calculator. I mean, make sure you work through these things first. But if you work through them and it makes sense for the life situation and circumstance you're in, I think house hacking could very well make sense.